Welcome students. In this module, we are going to continue with the remaining three systems of banking. That is investment banking, mixed banking and universal banking. Investment banking is also called as industrial banking. This type of banking was originated in Germany, which mainly focuses on providing long-term finance to meet the working requirements as well as the long-term requirements of a company. So they provide long-term funds required for acquisition of fixed assets which are required by a company for a long period of time, for modernization, for expansion of business and reorganization of the industry. All these reasons require huge requirement of funds which can be fulfilled by investment banking. Next one is mixed banking. Now mixed banking is basically a combination of deposit banking and investment banking. In deposit banking, we give only short-term funds, whereas in investment banking, they cater to long-term funds. So when you see mixed banking, it is basically a combination of deposit banking and investment banking. This system of banking is popular model in Germany and Japan. Banks finance the long-term requirements of industries as well as caters to the short-term needs of trade and commerce. The advantages of mixed banking. First one is expert guidance. For every investor, whether he is worried about to invest in short-term funds or long-term funds, there are experts in this bank wherein they will guide you exactly what you are looking for. So this reduces the burden of the customer. Second one is credit needs. As per the needs of the customer, mixed banking can cater or provide loans and other facilities to the customer. Third one, direct contact with the industries. Since they provide long-term funds to the industries management feel that they should have one of the bank employee in their management. So whenever they take any decision, this mixed banking can have a know-how of what they are doing. And fourth one is the rapid industrialization. When you get short-term funds as well as long-term funds from one particular bank, you need not worry of going to different banks for the same function. So this helps for rapid industrialization by concentrating on achieving your objectives. The disadvantages of mixed banking. First one is bad debts. Many times the companies or the customers cannot repay the long-term funds which they have taken from a particular bank. So automatically this leads to bad debts of a particular bank and also it leads to NPA, thereby endangering the position of mixed banking. Second one, speculative business. When the economy is doing well, this type of banks will be doing rapidly well because the share prices of the companies will be going on increasing, as well as the banks will get the refund of the amount which they have taken, as well as they can also charge high interest rates. Third one, scope for overlending. Sometimes in mixed banking, there is a high scope for overlending because when the customers deposit money, they are always to be payable on demand. So you never know when the customers can demand their money back. So when you give long-term funds to other customers, it is difficult to retrieve the funds in a short span of time. So this leads to overspending as well as it leads to creation of more NPAs. Fourth one is threat to liquidity. Sometimes when the banks cannot recover funds from their customers, which they have given loans and advances, it poses a serious threat to their liquidity position. As a result, it might lead to liquidation of that particular bank. And the seventh one is universal bank. In universal bank, these banks are engaged in diverse kind of banking facilities. They do broad-based and comprehensive activities. In India, State Bank of India is practicing broad universal banking. So here you can see universal bank actually does different types of activities. For example, first one, giving of loans and advances for long term. So in this way, you can increase your customer base. Second, they provide working capital. Working capital is the main element for any business. In order to survive in the business for a long term, you need to have a good and flexible working capital. Third one, corporate advisory services. These banks, universal banks, act as an advisor whenever the customer wants any idea or consultation while taking a decision. Insurance. They provide insurance for various activities which they offer, as well as various services which they offer to their customers. Depository services. Universal banks provide depository services, especially with respect to shares, debentures. Thereby, the customers have more confidence in this type of banks. Brokerage. They also act as a brokers when they want to purchase and sell shares in the market. If a customer is not having sufficient knowledge, he can always go to such banks and ask for their advice. However, a commission is charged for such type of service. Venture capital. This type of banks provide venture capital to meet the requirements if in the initial stages the companies cannot fund their business. Underwriting new debt, they provide underwriting features, and last, they also purchase equity shares. Now, all these services are provided by universal banks at a minimal, or it can be even at a standard rate. So, when a customer applies for such services, he has to always pay some extra amount for such type of services. So in my conclusion, we have studied investment banking, mixed banking and universal banking as systems of banking which are still emerging, or you can say they are still in their development stage. And these are the references, and thank you.